A new report out today shows New Zealand is lagging when it comes to net zero climate action. Co-author and Mindful Money Chief Executive Barry Coates is with us. Barry, what's going on?
Kia ora, Jono. I think we had a burst of enthusiasm a year ago around, if you remember, the climate summit of COP26 in Glasgow. There were a number of international fund managers in particular that made pledges to go to net zero. That was also reflected in some pledges in New Zealand. Subsequently, at that stage, we did a survey not only of those pledges, but across the finance sector as a whole. Now, 1 year later, we've updated that survey, gone into more detail, and done it in parallel with the survey in Australia. So we've got a direct comparison of results on the same questions asked either side of the Tasman. And as you said, the data shows that we are lagging behind not only Australia, but of course the European Union.
What's behind the plateau in behaviour then?
I think there was a burst of enthusiasm last year that fund managers and banks and others decided that it was a good thing to sign up to these pledges, and we also had, even for those who weren't signing up pledges, 89% of those said that they had ambition to do so and that they were on the pathway to do so. Now that's met kind of the cold light of day. There's been a realization that in order to sign up to these pledges, actually you have to make some pretty transformative changes to your business in order to really drive down carbon emissions in your portfolios. And I think that's been a change.
So does this report put these businesses on notice to say, hurry up, get a wriggle on?
It's not intended to in a way, chill action for businesses to really follow this pathway. More, it's intended to highlight the kind of measures that are required in order to make these pledges a reality. And the message is that actually all of the New Zealand investment sector ought to be doing this, because this is a way to build public trust, to say that fund managers, your KiwiSaver manager, your investment fund manager, your bank, your insurance company, etc., are on a pathway to reducing their emissions to the degree possible in their portfolio. So it's pointing out that there's good practice, there's guidelines, there's measures, and there's a credible pathway to do this.
Climate reporting, climate policy has been initiated, though.
That's right. And of course, New Zealand is the first country in the world to have regulated reporting on climate change. But what we're seeing, even with that provision of regulated reporting coming, New Zealand is still actually behind Australia in reporting, even though Australia doesn't have that legislation yet. So even on those measures, we're not doing well. We are on the route. More fund managers are reporting, but we've got a distance to go. More fund managers are putting in place climate policies, but there's measures below that that's going to make a policy actionable. And those actionable measures are things like setting targets, driving down your emissions, disclosing how you're doing, and particularly investing in climate solutions like renewable energy.
An interesting report against the backdrop of COP27 at the moment.
It is, and interesting also, given the debate that has been kicked off by the United Nations high-level expert group on net zero, of which Dr. Rod Carr was a member. And they came out with a very strong report saying that action is absolutely required, but at the moment, there's too much greenwashing and not enough progress. And so this is really a New Zealand expression also of what's happening at a global level. And we felt it was really important to have a granular look at the New Zealand finance sector. And we've had more than 3/4 of the funds under management in New Zealand respond to the survey. So a fantastic response, and we're very grateful to all those who responded. And we see this as being as kind of a foundational kind of step towards taking more action in future.
So you're saying that 2023 next year will be a bit of a turning point? Could be a turning
I
point.
think this is a time when actually the investment sector needs to step up. We've known for a long time that the investment sector has a crucial role to play in driving down emissions. They can avoid companies with high emissions who aren't going to change their business model. They can engage with companies to persuade them to change faster, and they can invest in renewable energies and other climate solutions. And those are all powerful tools in order to move faster as a society in the transition to net zero. So we need the investment sector to do this. And there are signs that this is happening, but it's all too slow, both in terms of what we need, but also in comparison to others.
Well, do businesses need to up investment in climate solutions? Can they do that in this high inflationary environment?
I think what we're seeing is that there are good reasons to be wary about investing in fossil fuels. I mean, of course, there's been recently an increase in the price of oil, but if you look over a long period of time, the financial returns on fossil fuel companies has been way below the market. And when international figures like Mark Carney, the ex-governor of the Bank of England, stood up a decade ago and said, beware of climate risk and stranded assets, he has been shown to be right by the evidence that the fossil fuel industry has not done well. And recently, the International Energy Agency has said, actually, the world has got enough oil and gas. We don't need new field development. And yet, recent surveys show that most of the fossil fuel sector are still out there exploring for more oil and gas and developing more fields, which will not be able to be used. Otherwise, our planet will become uninhabitable.
What does meaningful action look like to you?
I think meaningful action means action on those three key points. That once a fund decides to go in this direction, wants to be serious about driving its emissions down to net zero, and there's lots of reasons why this is a good business decision for them to do so, then it's focusing on those key areas, avoiding the high emissions, engaging with companies, and there's a new New Zealand Stewardship Code, which sets out best practice on engagement with companies, and thirdly, investing in the climate solutions. And I think it's in a way it's a pathway that now has really strong guidance around it. Initiatives like the partner of the survey, the Investor Group on Climate Change, which has an Australasian focus. We have the UN expert report setting out guidance. There's a lot of clarity there. So the Science-Based Targets Initiative sets out guidance as well. So there are clear models of a pathway to move down. What we need now is a commitment for the fund managers and the asset owners and the wealth managers to actually follow this pathway in order to drive down emissions.
Barry Coates, thanks for your time.
Thank you, Jonah.